Finance stock has come under pressure. It is down over 4% in trade on the back of the NBFC, in fact, releasing its mid-quarter update and stating that the B2B as well as the auto finance business has been impacted on account of the COVID second wave, and also they've gone ahead and reduced the AUM growth guidance, and they expect slightly higher credit cost impact on account of the COVID second wave. In fact, management in their mid-quarter update state that the B2B as well as the auto finance are the most impacted in majority states due to localized lockdowns. Volumes of these businesses dropped by nearly around 70% in April versus 40% in May. They expect better volumes in June 2021 on the back of reopening. However, the other businesses have been slightly less impacted. Management expects the overall economic activity to normalize by early July 2021, and they do state that Q1 is likely to see higher impact in terms of the AUM due to lower volumes. They're also stating that the second wave caused a marginal increase in the EMI bounce rates in Q1 as well as in the Q4 of FY21. They do state that the average EMI bounce rates in Q1 of the current fiscal were approximately 1x of the last quarter, and the company achieved 85% of planned disbursements in April 2021 and nearly around 60% in May 2021, and the average bounce rates in Q1 were 8% higher than the last quarter. In terms of the overall impact on the numbers, management states the company expects an impact of nearly around 4,000 to 5,000 crore on the AUM growth plan for FY22, and they have gone ahead and cut the FY22-23 AUM growth by approximately 1.6%. They've increased the FY22 credit cost to nearly around 3% versus close to around 2.1% earlier, and they're expecting GNPAs as well as the net NPA ratio to be higher both in Q1 and Q2 of FY22. They're estimating an incremental credit cost of nearly around 1,100 to 1,300 crore versus their overall planned credit cost for FY22, and the company follows ECL method, and hence the majority of the incremental credit cost impact would be getting counted in Q1, and hence we're seeing a good amount of impact in terms of the stock price as well. They're entering Q1 FY22 with an COVID overlay provision of 840 crore, and collections relating to infrastructure are catering to nearly around 25 to 30% higher. To mitigate the impact of the COVID, they have taken various measures to reduce their operating expenses as well as the cost of funds. Citi on Bajaj Finance states that they maintain a buy with a target price of 5,800 per share. Bajaj Finance has gone ahead and lowered the AUM growth guidance, and they're also expecting higher GNPAs and a slightly higher credit cost guidance, and that they are also acknowledging the fact that Bajaj Finance has taken steps to reduce the operating expenses and cost of funds, and hence they maintain buy with a target of 5,800 per share.